Somebody asked me last week why I don't teach trading, and I'm not really a teacher of trading. I have taught high school and college math and computer science, but in general, you know the students that you have, whereas on the internet, there's a very broad range of abilities and experiences and skill levels. So that's kind of not my thing. My approach on trading is kind of like a scavenger. I find systems uh, that other people have devised or refined or collaborated on, and I just learn those systems and I use them. Or I get picks or setups from various people and I use those, and I contribute back to the forums some of my own picks. What I see right now is, I mean, everybody probably has seen this chart where of the S&P 500, where we're basically at downtrending resistance here, and I believe the VIX is below 20. Usually, when the VIX is below 20, it indicates that the market's going to fall. So my position right now is neutral. Uh, Now I looked at this is a Max Pain chart on Apple, and the price right now is 133, but the Max Pain is at 132, which is around here. Um, if you look at the open interest, and this is for this Friday, you'll see 100K, almost 100K call contracts and over 100K put contracts. 100,000 contracts is a lot of contracts for an expiration, but you'll also see puts at 115, 120, 125, 130, 135, and a decent number of calls, but far more puts at these levels. And you also see calls at 145, 150, 160. I mean, these are a lot of call contracts, and I don't think anybody believes Apple's going to go up into this area by Friday. So I think you have a lot of YOLO at this end and this end. And, my guess is that these will expire worthless. But you have people that are extremely bullish and people that are extremely bearish, and I usually don't see this kind of volume in the put and call options. Apple's kind of a bellwether for the S&P 500, so I imagine this will have an effect on the S&P 500. So what I'm expecting this week is a decent amount of volatility to shake out some of these puts and calls. This week, Fed speakers, Williams, Bostic, Bullard, George, the Beige Book comes out, Harker, Logan, Collins, Brainerd, Williams again, Harker, Waller. There are lots of weeks when there are no speakers, and usually when there's speakers, there's like 1 to 3 or 4. So it seems like there are a lot of speakers out this week, which is kind of a minefield for the market because when these guys talk, they can move the markets in either directions. Last week, last week was really, really nice. I had a great day on Friday. I did a video on it. I'm not sure if I'm going to post it or not, but it just kind of goes through what my day trading looks like. So I'm kind of neutral right now, flat in my account, and I'm just going to wait and see what happens this week. There are strong opinions all over the place. Hedgeye, which is a macro house, was shorting like mad. I think last Tuesday, Wednesday, Thursday, and Friday. So they were shorting into this. So I imagine they have a lot of people that are hurting. They make a very strong case for the bearish environment. There are lots of people with very strong opinions on the bullish environment too. So we'll see what happens this week. I have a somewhat bearish bias because I follow the global macro folks like 42 Macro and Hedgeye and some of the other folks on Twitter. Anyway, that's it for this morning.